Thanks so much for tuning into this conversation with Volvo Eicher. They came out with their March numbers and about a 36% uptick in the total Eicher trucks and bus segment, and the total domestics were up about 42%. And even with the 36% contraction in exports, it did seem like a good number, and therefore that capped what turned out to be a pretty good year as well for Volvo Eicher, with an overall 39% growth for the company in 2020, FY23 or FY22. Mr. Vinod Aggarwal should be a happy man. Joins us right now on the show to talk about the month and outlook there. Mr. Aggarwal, good having you. Thanks for joining in.
Good morning.
It seemed like a perfect end to what was arguably a strong financial year. How is the landscape looking currently to you?
Absolutely. I think, first of all, we are extremely happy about the performance. We are touched a new peak, and we are very close to 80,000 vehicles in financial year 23. And we have grown with respect to our earlier peak of 2018-19 of 73,000 by 9%. Whereas the industry is still down as compared to the earlier peak of 2018-19 by 15%. 3.5 ton and above industry in 18-19 was 557,000, and this year the industry is 474,000. So therefore, it is still down as compared to the earlier peak, whereas we are up by 9% as compared to the earlier peak. So therefore, we are very happy about touching a new peak for us.
What about the industry at large? It's very difficult to consistently grow if the industry isn't quite growing. So from the peaks, so to say, how do you expect FY24 to be with all the impetus on infrastructure that the government seems to be giving?
Since the industry is still lower than the earlier peak, so therefore I would say there is still good room for growth as far as the industry is concerned. And there is more and more migration happening towards tractor trailers in the heavy duty trucks. Because when the road infrastructure is improving, it is beneficial to transport by the bigger trucks or transport by these tractor trailers. Therefore, to get these economies, more and more transporters will migrate towards these type of trucks, and which would mean more replacements. And replacements are also overdue, because during the COVID period, replacements didn't happen. So therefore, I expect that there will be very strong replacement demand that will continue. The second driver for growth this year, it will be the construction trucks, because with the government's heavy impetus on infrastructure and the huge investments that are planned, you will see more demand for construction trucks. The construction trucks, they were also very strong last year, but they are still slightly lower than the earlier peak. Whereas the tractor trailers last year also they touched a new peak. So therefore, I expect still good growth because economy is doing well. This year we are expecting, last year we are expecting around 7% GDP growth, and on top of it, this year also it should be a growth year for GDP. Therefore, I expect the CV industry will continue to grow.
Okay. So I reckon that until the monsoon set in, without getting into specific percentages, because it's impossible to predict, but you reckon that this showing that you've done in the month of March could well continue to April and May at least?
We expect no reason why it should not be a good period. There will always be some impact in April, because April definitely there is some demand gets shifted to March, because March also gives more advantages as far as depreciation benefit is concerned, or some price increase happens from April every year. So therefore, April always, if you pick up the trends of last any year, April will be always not as strong as the March is. Therefore, that impact, natural impact will be there. However, there is no other fundamental reason why the industry should not continue its growth path even in Q1 of this year. It as compared to Q1 of last year.
Yeah, okay, I get the drift. And there has been a price increase that you've done because of BS6 as well as to combat inflation. Is this enough to combat the inflationary pressures, or do you reckon some bit of a hit could be shown? Because I was under the impression that actually raw material costs are coming down.
Raw material costs are not coming down. They have become a little bit stable, but there is also some pressure coming again from some quarters for the price increases. So we are expecting that there will be some pressure on inflation. And we also should not forget that even the previous inflationary pressures, the industry has not been able to pass on fully. If you go back, the steel used to be at 37, 38 rupees per kg. And it went up right up to 75, 78 rupees per kg. And now it has dropped down to around 60, 62. So it is still much higher as compared to 37, even though it has come down. Now, the industry has not been able to pass on these increases. The second is these discount pressures have been continuing consistently. Therefore, even though discounts are coming down a little bit, but because of this, there is always a case for price increase for inflation also. And on top of it, there is some cost increase happened because of the BS6 OBD2 norms. So combined together, I think the price increase, as far as we are concerned, it will be from 2 to 5%, depending on the model to model.
And that will be it. You will not take more price increases.
No, this we are taking in April, and then let's see. Then if the inflation is there in the coming months, then we'll have to think again.
Just one slightly medium-term question, Mr. Aggarwal. You are planning to invest in newer technologies, if I'm not wrong, about 250 odd crores in hydrogen projects, other things. Can you tell us a bit about what is non-conventional and coming up in the next 6 to 12 months for the industry or for you?
When you say non-conventional, but
I mean, what is routine is the trucks that you're selling, but if you're investing in some hydrogen projects, if you are doing something new in the existing vehicles, I mean, electrification is some time away, but what have you? So I'm just trying to understand what is coming up in the next 12 months.
No, these futuristic technology investments have to continue, because if you don't invest at this point of time, when the technology comes, then you will not be ready. Therefore, the investments have started happening for all the futuristic technologies. As far as the immediate need is concerned, I think we expect more and more migration towards the alternate fuels. Like, for example, you will see some movement happening towards LNG trucks for the long haul trucks. And if the LNG distribution becomes good, then you will see some movement happening towards LNG trucks. CNG again should come back. CNG, it was doing very well till around a year back. Then it got a setback because of the price increases. Hopefully, there should be some correction which should happen, and then CNG should come back. So these are the alternate fuels which are going to become more and more popular. Therefore, CNG and LNG, I expect, will be the immediate, new technology which will happen more and more. Then, of course, electric buses are already there. Electric buses, you will see more and more happening. Then, apart from that, we will see the hydrogen. The work has started, but hydrogen, actually, when you start seeing the hydrogen on the roads, it will still take time, because hydrogen still, I would say, it is still away by maybe around 3 years or 4 years. So you will see slow and steady movements towards the new technology.
Got it, sir. Got it. So congratulations on a strong month and a strong year, arguably, and all the best for the quarters ahead.
Thank you. Thank you very much.
Viewers, thanks for tuning into this conversation.